with the management of Max Healthcare. Very strong numbers. Across the board, actually, hospital companies have been doing very well. Good revenue growth, average revenue per occupied bed has also surged, but the occupancies are at the lower end this time. Abhay Soi, the Chairman and Managing Director at Max Healthcare, joins us now to talk about that. Abhay, pleasure speaking to you. Thanks a lot for joining in. Can you start by telling us what the guidance is on the revenue and the average revenue per occupied bed? Wanted to understand what are you expecting going forward, because on a quarter-on-quarter basis, occupancies were a bit flat. But what do you see in the subsequent quarters, and what is the growth that you can eke out?
So quarter-on-quarter occupancies were flat, like you rightly pointed out, but do keep in mind that the fourth quarter is the best quarter in the year for hospital companies, and the first quarter tends to be the weakest quarter of the year. In fact, usually the gap-ups are a lot more than this. I'm quite happy to sort of look at the occupancies in the current quarter compared to quarter four. I mean, you'd see there's an increase Y-on-Y as far as occupancy is concerned. And on, like you rightly pointed out, on the quarter-on-quarter, it's sort of flat or marginally 1.9% lower. But like I said, that's true to the seasonality of hospital plays. We're expecting it to pick up like it does every year. I think if you just take the exception of the COVID years, of course, but otherwise you'll see a secular trend up as far as occupancies are concerned.
Abhay, hi, good morning. What about margins? I mean, can we extend that same point about the seasonality of it there as well? Because margins were down, I think, about 260 basis points Q1Q, and they were down some 15 basis points year on year. How would things look from here?
Look, I think, there's something I don't focus on is margins. What I look at is absolute value, which is EBITDA per bed or EBITDA. Because the moment you start doing high-end business, be it on the clinical side or the payer side, you have lower margins, but you have higher amount of absolute value EBITDA which is coming in. So, case in point is that you'll see, our international business has grown by more than 31% year on year. And international business is high ARPOB, is high overall EBITDA per bed and high absolute EBITDA. But, on an overall basis, there's lower margin. So if you look at, some of the other things that we've gained from, which is oncology, we've looked at, you look at cardiac sciences, robotics, which is more than doubled over the last 1 year. All of these are low percentage margin businesses, but high absolute terms. So, I keep saying this, you'd rather do a $10,000 surgery at a 20% margin than a $2,000 surgery with a 50% margin. And look, you see that as far as ARPOBs are concerned, and you see the result of what I'm saying as far as EBITDA is concerned, because you had a massive increase over last year, year on year, as far as EBITDA is concerned. And yet, compared to quarter four, which is the best quarter in the year, like I mentioned earlier, and quarter one being the weakest, that aside, you still have a flat EBITDA Q on Q, which in my memory, I mean, pre-COVID, has never happened before. So quarter one is always lower than quarter four, because on 1st of April, you have salary increases, etc., which typically need to get absorbed through the growth, which happens through the year. But this is the first time that we're seeing that it's flat. So I'm very, very sort of encouraged about future quarters.
All right. Hi, Abhay. Good morning. So what should the EBITDA per bed look like then? On a broad range, if you could give us. And also the international business that you mentioned, it's growing very, very well, more than 30% on a year-on-year basis, 9% of the revenues. Has the Afghanistan, which was a key market, has that come back?
Well, I mean, fortunately, unfortunately, this is in spite of Afghanistan not having come back at all. So our business from Afghanistan is zero as we speak. And we're expecting it because we've seen some flights which have started recently, very, very recently from Afghanistan. So we are hopeful that in the coming quarters, this business should come back. This used to be about 10-12% of our total international business. So we are encouraged by, like I said, these maiden flights which have just started recently, and we are hoping this business comes back soon. I will not be able to give you a guidance as far as EBITDA per bed or revenue, because I sort of normally stay away from guidances.
Sure. Yes, we know that. But I wanted to talk a little bit about the diagnostics business, because, There's so much happening there. There's so much competition as well. But you folks have managed to eke out what? Almost a 39% growth, double-digit growth across the board. In your diagnostics business, in Max at Home business has grown 24%. Are you profit-making as well? And what kind of growth can you see in the diagnostics business here on, considering that there's so much competition now?
We've seen a 35% growth for the last 5, 6, 7 years in the diagnostics. Of course, it's on a smaller base. Like you rightly pointed out, you had a very good year-on-year growth, but even on a quarter-on-quarter basis, Sonia, we've grown by 10%. This is over Q4. So yes, this business is doing well. We're hitting the ground hard. We believe there's a space for hospitals because of the higher value proposition that we're able to provide through our labs, which are state of the art, and where it's manned by professors, it's manned by DNB students, and so on. And what we are being able to do is convey that excellence, in the perception as well of the hospital. So it's sort of working for us. And we are quite, I believe, Max Lab and Max at Home, both, and by the way, both are profit making. Max Lab a little less so, and Max at Home does a mid-teen sort of a profitability. These are large businesses of the future, and we are very sort of hopeful about this.
Taken some price increases as well, right, Abhay, in June, especially on the radiology side?
Sorry, I missed that.
Abhay, you've taken some price increases as well on radiological imaging. Large number of tests have undergone price revisions?
No, so I think there have been two things. Every year on the 1st of April, we have price increases, which are usually about 2.5% of our top line impact. But what has happened in June is CGHS, which is the central government health scheme, that is, or the institutional business that we do. The government, after 40 years, actually has revised rates as far as diagnostics and room rents are concerned. Combined, this doesn't move our ARPOB by even 0.5 or 0.6%. So it's not a big market. Yeah, so the price revision in CGHS happened because we haven't revised the price, the government has revised the price.
Okay.
And like I said, but it's a very, very marginal increase on ARPOB and our revenue. It's less than 0.5%.
All right, Abhay, what do you plan on doing with your holdings? You had KKR who exited a few months ago. Now you're the largest shareholder with 23% odd. Do you want to cash out at some point of time, or do you intend to continue holding on?
No, I don't intend to cash out. I've never sold my shares and I've never levered my shares. Even at the cost of, potentially increasing my shareholding. So, that's not the sort of business I'm in. I'm not a private equity, it's an individual holding, and I'm seeing great potential. We're doing huge amounts of capex going forward. I'm seeing a flywheel effect. All the development which is being done by the government is, sort of winds beneath our wings, and the opportunity to sort of just participate in this development through investment in capex, and the great opportunity that we have ahead. Is going to keep me occupied. And I'm short of 50 right now. It's going to be my 50th birthday, so
Abhay, the short point is we get that you're committed to the business because there'll be various analysts on the street who will talk about the stock, but you'll be the best analyst on your own business, and that's what we wanted to hear, right? You believe that there's good potential, so that clears the point. Final question before we let you go. Institutional business is around 29-30% of your total business. Any outstanding receivables, if you quantify that amount, or has the money been coming in?
No, so money's been coming in, and I think we've also recently opened about 130 odd beds at our Shalimar Bagh facility, and so we had to sort of be a little more accommodative as far as institutional business is concerned, because new capacity, the first sort of this thing is to occupy it. But if I look at the institutional business X, the new capacity, we're down to about 27%, so it's come down. And the government has revised rates, and they're scheduled to revise hopefully some more rates in the near term. So we have not been taking any significant actions as far as reduction of the business is concerned.
Okay, I like it when you said, you're short of 50 and you have still a long time to go. 50 is the new 40, isn't it? So we hope best of luck. I'm sure your, shareholders, stakeholders would love the fact that you continue to stay on and not looking to exit anytime soon. Abhay Soi, thanks a lot for joining us on CNBC TV 18.